Varmt välkomna till denna fortsättning på Erik Penser Banks bolagsdag. Nu ska vi lyssna på mycket intressant bolag, OssDsign, som befinner sig i tillika mycket intressant skede i bolagsutvecklingen. Bolaget kommer presenteras av dess vd Morten Henneveld och presentationen kommer hållas på engelska. Varsågod Morten.
Thank you very much, and thank you for having me. As always, when we do this presentation, we have a normal disclaimer on any forward-looking statement. I want to take a little bit of a step back because many may know OssDsign as a cranial patient-specific implant company, and that's true. That's what we were for the first 10 years of our lifetime. In 2020, we did an acquisition of an orthobiologics technology company, and we started commercializing that in late 21, and that has substantially transformed the company. As you can see on this chart here, the orthobiologics business already became the fastest business, also the fastest growing business within 18 months, and essentially achieved in less than 18 months what has taken 10 years on cranial. That has translated into very sustainable and continued high revenue growth. We now have 6 very, very strong quarters in a row. The last 5 getting close to 100% growth every single quarter. It's also catapulted our US business into a very exponential growth curve. We just reported Q3 numbers here on Tuesday this week, when that marks the 6th consecutive quarter where we've seen triple-digit growth in our US business. And last but certainly not least, over the last 3 years, as a result of the orthobiologics business, we have managed to double our gross margin from 40% to 80%, just reported on Tuesday. So as a result of that, late September, we announced a strategy shift in the company, which means that we will become a pure play orthobiologics, fully focused on our orthobiologics and fully focused on the US market as of January 24. So let's go a little bit into why we are making this shift. You know, our orthobiologics business, we are focusing for the time being, we are cleared for more, but we have a full focus on the spine segment. In the spine segment, unfortunately, as we grow older, our spine naturally degenerates. Some of us will have spinal instability and will need what's called a fusion fusion surgery, apologies. And essentially what that means is that you're using screws and rods, and then you're always using some kind of graft, bone graft, in that procedure in order to make sure that you have, in the name of fusion, that it becomes integrated part of the body. So there is a need for bone graft in every single spine surgery. What we are bringing to market is, and this is the primary reason why we acquired the company in 2020, is the best preclinical data we've ever seen. In the company, we may have been a cranial company for 10 years. We actually have many more years experience in the management team, myself, the board, and the entire US team, all have past life in spine and biologics. We have never seen preclinical data this strong, so that is one of the main reasons why we acquired the company. What you can see here on the right-hand side, the gray bar is actually the de facto gold standard as defined by the FDA, using iliac crest, so harvesting the patient's own bone from the hip, and using it, as you can see, we're performing much better than that. The light gray bar is a competitive product, Mastergraft from Medtronic, which we compared against, and you can see we are performing much better than that. In addition to that, and this is a very overlooked quality typically, which is, does it work in the hands of the surgeons intraoperatively? And this is what we refer to as handling qualities. And here we're seeing some exceptional handling skills. This is probably the most common comment we get from new users of the product. It handles exceptionally well. And by handling, we mean that surgeons can mix it with the patient's own bone, they can mold it, they can rest assured that it doesn't what's called irrigation, it doesn't dissolve when you mix it with liquid. And by that, that builds trust and confidence because you want the bone to grow where you place the bone graft. You don't want it to run because then you don't get the bone graft where you need it, but you may actually have adverse events because you start to see bone growth in places you don't want. So we are seeing surgeons having a high level of trust and confidence in using the product intraoperatively. And then something extraordinary happened here in September. We got what's called an interbody clearance. This means that we are now cleared for what you can see in the right, in the red circle. We are now cleared for use in the interbody space. This is a very unique thing to have in the market right now. There are only 3 companies in the entire US market that have this. And what's interesting is the other 2 that got it, 2 of the large players, they actually came in with 75 clinical data in order to get that clearance. We came with our preclinical data, and the FDA rated that equivalent to 75 patients from one of the other ones. So we are the first one to be cleared on the intrinsic efficacy on the bone graft alone. What's also interesting here is that we typically compete against the latest generation products. The other 2 that have this clearance are older technologies, and it means right now we're the only of the latest generation products that are known to perform a lot better than the older generations, but we're the only ones. When we compete, typically we also compete against the pure play orthobiologics companies. So those that are fully focused, like we will be, on orthobiologics. And in that group, we are also the only one to have it. And why is this important? Well, it's important because for many years, surgeons have been putting bone graft into the interbody space because they need to do that in order to get a good clinical outcome. The FDA has just never cleared any product for that. So they have been using it off-label. Now they will be able to use OssDsign Catalyst on label for all major spine procedures. And what it means is, this is a fairly crowded market. It just means that OssDsign Catalyst, even if it's almost still a new kid on the block, was elevated overnight to become this elite category synthetic bone graft. So this is certainly something that we are using very actively as we speak. But also, we are not just focusing on, I talked a lot about the growth numbers and the momentum we're seeing. We are also making very meaningful investments into the midterm. We have 2 clinical programs running called Top Fusion, our first in man, that's fully enrolled. We expect to publish that in the first half of next year. But we also started a registry, Spinal Fusion, where we have 10 centers in there. We have more than 200 patients in that registry. And that means that we will also have opportunities to start publishing some of that data as we come in, most likely in the second half of next year. So 24, will be a really interesting year for us, where we will add more real clinical data behind and obviously use that to accelerate the momentum that we already have. And what does it mean now that we become a biologics-focused company? Well, we are going to focus on the US, and as you can see, the US in itself is $1.8 billion market with a nice underlying growth. And what's going to help even more is that we are coming with a synthetic and nanosynthetic bone graft. And there is a number of tailwinds or shifts happening in the market. First and foremost, as you may know, the underlying patient population is just going to increase. We have the Second World War baby boomers. We also get older, luckily, right now, and that means there will be a need for more spinal procedures in the future. There's also a few other shifts. Surgeons have different options. They can use the patient's own bone, allograft. They can use a donor-based product called allograft, or they can use a synthetic. What we're seeing right now is that the synthetic products in general are performing at a better rate, and they don't carry the risk of transmitted diseases. So we are seeing a shift. And then last but not least, this market has lots of old products still out there, and they're still being used. We are seeing surgeons shifting to a very high degree, actually, at the moment, away from the older technologies into the latest generation technologies, simply because they are showing higher efficacy. So it's a very interesting market. It's high priced, it's high volume. That volume is going to go up, and even the segment within that we are directly playing in will keep growing much faster than the rest of the market because of those shifts. Becoming a pure play of a biologics company also means that it will be accretive to our gross margin. We are exceptionally proud already that we've been able to increase our gross margin from 40% in 2020 to just reporting 80% here on Tuesday this week. Going forward, we will have a business which is at or above 90% in gross margin. So it's a very healthy margin to operate with, and of course that means that as we fast forward into the future, we will be able to run with profitable growth. As part of the strategy shift, we also updated our strategy. It's called Thrive 26. It has 4 very clear priorities. I wouldn't say it's rocket science because it's by and large a continuation of what we've already done, because that seems to have a really good impact. So we're not changing too much on that. We will continue to focus on the US naturally now. We will also now, with not having cranial, we will have the resources and to start accelerating some of our R&D and innovation effort. We will continue to prove our clinical performance, and then we need to build scalability, not least short term, in our manufacturing and supply chain, which in all fairness is something that we've been working very hard, just keeping up with demand, because that has even exceeded our own expectations. So to sum up, we see this strategy shift as being positive and accretive to shareholder value in the future. As I said, it is a large market, solid underlying growth. It has a good price. The business is highly scalable, as we've already demonstrated. Doing what took cranial 10 years, we did it in less than 18 months. It's a high gross profit business to operate in. We will also operate with a much simplified business, which from a company perspective means that we will have a lot more focus by just US and just orthobiologics. As part of the shift, of course, we will also reduce, when we announced it, we said we can reduce OPEX by about 30 to 40 million by not having cranial. Of course, that does mean that it drops through to the bottom line. There is certain elements of that we will reinvest, as I said, in R&D and clinical programs, not least, and manufacturing. And of course, as the business keeps growing and cost is coming down, then we will see more operating leverage and hence a reduced cash flow over time. So all of these together we really see as something that will drive much higher shareholder value in the future than what we've seen in the past. So I think with that was everything I had to say.
Okay, thank you very much, Morten. Very interesting presentation indeed. Initially, a bit on the US marketplace. You know, we're coming now from the COVID period and the post-COVID period, and the hospitals in the US suffered a lot, both during COVID and post-COVID, with shortages in personnel and so forth. And there is a pent-up demand for this operation. Can you outline a bit on how you see volumes in the near term, 1 to 2 years, given what happened during the last 3 years?
Yeah. I mean, I'll be honest, we haven't really heard of patients' backlog for probably about 18 months now, 12 to 18 months. We have seen a normalization on the elective procedures in general. So that has been less of a concern. I think where we have and still continue to see an impact is that the COVID and the post-COVID period has had a real adverse impact on the hospital's own P&Ls. So many of them, in particular the large hospital groups, are posting big losses these days. And that means that they are going through quite a lot of restructures. There's consolidation, there's cost reviews, and that has an impact on the VAC processes, right? The approval processes for us to get into a hospital for a long time have typically been 3 to 4 months. Now we are looking at an average more closer to 9 with the big hospital systems. We just won 2 of them, but they have taken anywhere from 12 to 18 months to get through. So I think the biggest impact we're seeing right now is those delays. Having said that, we have more hospital approvals right now than what we believed we would have earlier in the year. We actually hit our target back in September. So I think we are navigating it well, but of course you want to get some of these real big hospital systems, and they just take longer these days than what we're used to.
You recently signed a contract with the veterans hospitals in the US. Outline a bit what actually is that, and what can come out of that, because they are spread all over the US, and it's sort of a federal program for veteran hospital. Outline a bit so investors understand basically what this is and what the opportunity is there.
Yeah, well, I mean, it's not actually the contract that we signed. We actually won what's called the DAVA contract a few years ago for both cranial and catalyst way back when. But so we've been on the contract for a period of time. Actually, I think the first purchase we had in the US was a military hospital. But there are many military hospitals. They also change structure quite often. And it means that you need to, even though you're on contract, you still have to go hospital by hospital to get into and get up on the system. Now with what's called the ECAT, which is an e-catalog that they have implemented, it just means that we are already in the system because we are on contract, and that means that we become universally available to all the sites. It doesn't mean that it translates to sales tomorrow, because you're still going to have to go to the surgeon and convince them to use the product. But it does mean that we won't have to go through all the administrative processes hospital by hospital. We are already in the system. So eventually, of course, we think this is going to it certainly broaden our access, but it doesn't take away the fact, unfortunately, that we still have to do the heavy work on actually persuading surgeons to use our product first.
You touched a bit on the user-friendliness of the putty. I think that's important to elaborate a bit more so investors really understand. Why is user-friendliness such a big selling point with surgeons? Basically, why? Outline that, please.
Yeah, and I think, I think it's more than just, it's certainly user-friendliness, the fact that you can mold it and you can feel it and you can mix it well. But I think the important thing here is that a good mixing and handling has a direct impact on your clinical outcome. There are products out there, actually also quite potent products, that are notoriously known for dissolving when you mix it with liquid. And imagine if you're a surgeon and you place bone graft, between the vertebrae, and you say, that is where I want bone to grow. If that starts to run, well, then you're not going to get bone growth there, but you may actually get it in a different place. So there is a correlation between trust and confidence in the handling, and therefore the ease of use, to actually an expected clinical outcome. And that is why it builds this trust and confidence, because they can see and they can feel that they can mix it and mold it, and they can do all kinds of things. I actually showed it in a presentation here where I dropped it in a glass of water and it stays. It does not dissolve. And that is that's probably our biggest selling point right now. I think that's what convinces most surgeons to come on board. But quite often, with these things, when you cannot clinically prove them and so on, it is something that all companies will say they have. This is actually something that we hear constantly, I would say, from our users of the product. So as we've been getting more and more feedback, of course, we have also doubled down on it and made it clearer and clearer and clearer in our communication that this is what we're offering, and it works.
You also mentioned that you received the regulatory approval to use catalyst in combination with intra-body cages, which is of immense importance. The reported numbers so far on catalyst sales, those are mainly coming from off-label use, right? Basically, you have no sales from on-label yet on the last report, is it?
Well, I think that's a proof of modification. Since the product was used, we assume, because we don't know, We are on label when it comes to what's called posterolateral fusion. So when you place it on the vertebrae, we have been used off label if they've used us in the cages. Listen, I don't think this is not something that just switches on sales tomorrow in the sense, because if they love a product and they've used it off label for 15 years, then they're probably going to continue doing that. But I think it's going to have an impact in two ways. One, on the hospital processes. That's where we expect by far the biggest impact, because we are now one in few. We think there will be more coming, but eventually there will be many who will never have this clearance. So we will remain in this elite category, and that's going to be extremely helpful as we need to get more hospital approvals. And then the other one, of course, is if a surgeon decides to switch a product and he has to choose between two new products and thinks that they're probably equally good, and one can be used on label in the interbody space and one doesn't have it, then there is a pretty good chance that he will choose the on-label. And by that, you can also drive more usage. But I think the biggest impact would be our ability to get into hospital systems, because now we are in a league of our own.
You announced, and you touched base on that as well, your strategy shift. But in conjunction with the strategy shift, you made a new share issue. Outline a bit, how much cost savings do you see from discontinuing the cranial, which will be at the end of this year? And you have a solid cash position. Let's take the financial questions a bit.
Yeah, I mean, I think I'll stay to what we said. Or let me take a step back. We're extremely pleased with the directed issue. As you know, we had to upsize it 50%, and even that was oversubscribed. So we saw a very big interest, very high interest in coming into OssDsign and supporting us in the years to come, which of course we are highly appreciative of, and also with some very good new names. As we've said when we updated the financial target, we expect to get to 150 to 200 million in the medium term, which is also the time where we could break even or go cash flow positive. Now, of course, you know, some of the things we are discussing, when we said we are focusing on orthobiologics, we said it was because of two things. One was we did not see a sustainable business on the cranial side. We saw it being dilutive to top line, to gross margins, and to profitability in the years to come. The second one, which I think is actually a lot more important with the momentum we have on OssDsign Catalyst, that is, cranial has been holding us back. It has a large structural cost base, it takes up lots of time, and it simply means we've not been able to mobilize as we would have liked to or should have on orthobiologics. We would have liked to have been more aggressively moving on R&D and innovation, on automating the production, make sure that it can cater for a 10-15x volume. And also we need to think about what's the next clinical program we should be running. So, of course, you know, the savings by not having that, of course, some of that at least has to be reinvested. So we also build a company for the future. Now, what exactly the decision where we end up, that's something we're discussing at the moment. But clearly there are things to keep the momentum we have right now. We have 297% growth on our orthobiologics business year to date. I can't guarantee that we will stay. We probably will not stay at 300% going forward. But we do want to keep building the business. So we have to make very sure that we don't get too short-sighted in our priorities, but also we find a good balance between short and medium.
Okay, thank you very much, Morten. Very interesting presentation, and as I said initially, a very interesting company in a very interesting stage. Thank you very much, Morten.
Thank you very much for having me. Thank you.